I'm James Turk. I'm the founder and chairman of Gold Money, and I'm here with Alasdair Macleod, who's the proprietor and creator of financeandeconomics.org. Alasdair, it's a real pleasure to meet with you, and I'd like to first start talking about financeandeconomics.org. When did you create it? What are you intending to accomplish with it? You've written, by the way, some brilliant essays, which I very much like.
Well, thank you, James. I created it about, I suppose, just a little less than 2 years ago. And my mission really is to try and explain to what I'd call the educated man what is actually going on in terms of finance and economics. So the articles I write cover everything from the relationship between politics and economics, what goes on in the banking system, and of course, because I am a believer in sound money, articles that are very, very much angled towards showing the difference between what happens in an inflationary environment and the benefits of sound money.
Reading your articles, you've obviously got a keen insight in terms of what sound money is, and just out of curiosity, how did you develop that working knowledge?
I think really by being an avid reader. I also believe I have an enormous advantage, and that is I didn't go to university and get an economics degree. So I came at this without the prejudices, if you like, that someone educated by the establishment naturally has.
So you also had an open mind when you were attacking the
Absolutely,
issue.
yes.
Were you driven by something specific? Is it the brown bottom when Gordon Brown sold all of half the gold reserves, or was it inflation in the UK? Were there some specific events, or was it just cumulative over the years?
I think it's cumulative over the years because I started my career in the city as a stockbroker in 1970. Seems a long time ago now. We've seen an awful lot of change. We've gone through big bangs. So we've seen how the banking system has moved in on the securities industry, and how they have managed to make an awful lot more money out of it than we ever did as poor, lowly stockbrokers. The whole thing has evolved, and it has evolved in a way which is inherently inflationary, I believe. So I've been following this story from the old days of the old stock exchange, where I first cut my teeth, going all the way through the years of the Labour governments in this country in the 70s, going through the Thatcher and Reagan years, as it were, the time of Volcker, and if you like, the closest we've got to in a long time at a stab at sound money, because he just jacked up interest rates. Through the major years in this country, and then when the socialists got elected in 1998, actually what I did was I thought, well, I can't really hang around and watch this, because I could see the way the socialization, if you like, of the economy was going to go, and I just didn't want to hang around, so I thought, time to take a break. So I then moved over to Guernsey, and I lived in Guernsey acting as a consultant, and I became a director of a bank, and so I was very much sort of hands-on, but in the offshore environment, and that in itself was an enormous education and a freeing of the mind, I think, as well.
Mm-hmm. You remember the Slater-Walker collapse then?
I do indeed, yes.
What are the similarities to that to where we are today?
Well, it's very interesting because the similarities then were...
We're talking 1974 here for people who aren't familiar with it.
Well, in the very early 70s, we had the Conservatives were elected, I think, in about May 1970. And funnily enough, my uncle was Ian Macleod, and he was Chancellor of the Exchequer. Unfortunately, he died in office some 6 weeks after the election, and Anthony Barber, Tony Barber, then became Chancellor. And he presided over the issuance of a lot of money. Money supply was expanded rapidly to try and get the economy going, and this was known as the Barber Boom. The stock market had a good run up on the back of this to around about the middle of 1972. That then faded, and there were strains beginning to show, if you like, in that aspect of the financial system. Then there was a property boom, which actually culminated in the secondary banking crisis of 1973. It was October 1973. And the shares of property companies fell to roughly 1/10 of what they were in a matter of weeks. That was a real crisis. And the similarities, but on a longer time scale, to what we have seen recently. We had the peak in the markets, which was irrational exuberation, if you like, in the year 2000. We had a bear market where broadly stocks halved. We've had some sort of recovery, along with property prices, asset prices generally, being fueled by this common factor between the 1970s and now, and that is the production of money and credit in huge, huge quantities. And now we've got the property, the property thing peaked in 2007 with the credit crunch, and now it's on its way down. And I just look back on the relationship between 72 and 74. I know it's a bit more strung out this time, but it's a lot bigger than it was. And so it's actually quite dangerous.
Yeah, I recall those years very, very well, and specifically how quickly the collapse occurred back when the boom in housing eventually did fall apart. Is it strung out more this time because government involvement is trying to delay the inevitable, whereas back then there was less government involvement and the market just took care and purged the weak links in the chain and then started rebuilding from a new base?
I think that's certainly true that government have put more mechanisms in place to delay the natural corrections that markets should go through, correcting the excesses, if you like, which are entirely as a result of the printing of money and credit. Mm-hmm. It's nothing else, it is that. And the answer to these things, as far as government is concerned, is yet more money and more credit. All they're doing is they're deferring a natural correction in the market, and the correction in the market that is required when they can delay it no longer is just getting so large that nobody actually dare face up to it now.
Well, governments seem to think that they can defer the inevitable correction forever, but obviously you don't agree with that.
I don't agree with that, and I would say that in history, I know that you're an avid reader of financial history, all governments think exactly that way. They actually think that they can control things. Yeah. And it doesn't.
So the bottom line is that you're pessimistic about the outlook for the British pound here.
I'm pessimistic for all countries that operate on fiat currencies, because they have got themselves in a cycle of money and credit production which they cannot get off from. And the problem really is that neither central bankers nor politicians are appointed to address the problems that we now face. And no one is going to willingly tip the whole world into a real depression, which incidentally I think in some countries is already here, because we get numbers like GDP numbers which are wholly distorted. All the capital spending, all you look at is final product. All the interim stages of the production of capital goods are not captured in GDP numbers. Mm-hmm. They get inflated by all the extra money and credit that is produced from within the financial system, so you're not comparing like with like. And the last way in which they really do disguise what's going on is by manipulating the inflation figures, because GDP numbers always have a deflator, which makes sense, but when you can manipulate the deflator so that it shows that the economy is not doing as badly as perhaps it feels, then that is pure government manipulation, and we are seeing that.
Yeah, but I mean, they seem to be fighting a losing battle here. The inflation statistics that have come out over the past couple of months show that inflation is definitely a worsening problem in the UK. And I think most people recognize it's much worse than what the government even says it is. So are they losing control?
I don't think they've ever really had control. I mean, I think both in the UK, Europe and America for that matter, I think the authorities, if I can call them that in the broadest sense, have been on the run since the credit crunch. Mm. The problems have not gone away. They have been buried somewhat. And of course, we all like to think that it's been dealt with and we can get on with our lives, but I'm afraid that's not the case.
So the best thing that we can do as individuals is to take those steps to protect ourselves and our family as we watch events unfold.
Nobody else is going to protect you, that's for sure.
And gold and silver have a role to play?
Well, they are the only sound money there is, because the point about fiat currencies is they can be produced by governments at will, and with the fractional reserve banking systems that are common everywhere where these fiat currencies are, the banks create the credit as well. So you have got a fundamental instability in the system, which at some stage will mean the purchasing power of these paper currencies will fall very dramatically. Mm-hmm. So my view on gold and silver is I'm not bullish on gold and silver, but I'm extremely bearish of paper currencies.
I understand your point completely.
Yeah.
Paper currencies are going to lose value,
exactly,
whereas gold and silver will actually maintain the wealth that's
yes,
embodied in those currencies.
Absolutely. I mean, the problem that investors face is that these are manipulated markets. The short positions, particularly in gold, amongst the central banks who run what are called sight accounts, which aren't necessarily backed by the gold that they say they are holding on behalf of others, because it is on balance sheet, as it were. So you've got the sight accounts. In the bullion banks, you have got unallocated accounts, where basically they run those accounts on a fractional reserve basis. And then you've got the short position in the futures market, which has come about purely as a result of these banks trying to manipulate the price of gold and silver downwards. Mm. So you've got enormous short positions which have built up. And that is a huge, great technical position which does need to be resolved. And unfortunately, its resolution will probably be triggered by economic events as much as anything else. And when that happens, I just don't know where they're going to get the gold.
Yeah.
The LBMA, under their standard unallocated account agreements, actually permit the bullion banks to pay out their unallocated accounts in currency equivalent. So that won't need to be covered. But I'm convinced that there is a fairly large short position amongst the central banks. In other words, they declare they have got more than they actually have. Mm. And then we do know what the short position on COMEX is, because that is visible.
Right.
So you know, it's covering those two things, and particularly the COMEX one as the most visible aspect of this. I think actually it's going to be very difficult, and I don't know where. I mean, 2 weeks ago, I think it was something like 700 tons of gold was the short position, something like that. The silver position is over 200 million ounces, I think, between the various commercials. Where are they going to get it from? The only people who I think have got the gold are the Chinese, which actually puts a very interesting spin on the relationship between China and America.
Well, there's clearly a lot of wealth being accumulated there, and the Chinese periodically announce that they've been increasing their gold holdings, no doubt about that. I guess, you know, as this all comes to a conclusion, people are going to learn the difference between physical gold, physical silver on the one hand, and paper gold and paper silver. And clearly the advantage is to be on the physical side, not the paper side, because the paper is going to be defaulted. No,
you're absolutely right, James. And I think one way of looking at the relationship between the paper market and the physical market is that the pricing of the physical market has been dominated by the activities in the paper market. And the activities in the paper market have all been angled towards suppressing the price of gold, because nobody wants the embarrassment of these short positions getting any worse.
Yeah.
The effect of that has been to drive the physical out of circulation. We hear too often now for this to be more than just a rumour of people buying silver, buying gold, and finding that they can't take delivery because the delivery isn't there, or it is delayed, and it's delayed, and there are excuses. But I think you've got some experience of this.
Yeah, this is an interesting point. You know, when Warren Buffett accumulated his 130 million ounces of silver back in 1997, he didn't do that in one day or 1 week. It took almost 7 months for him to accumulate 130 million ounces. And back then, silver was out of favor.
Yes.
You know, nobody wanted it. And so to take that long is sort of, you know, something that we should focus on. And more recently, Sprott Physical, a new fund issued by Sprott Asset Management in Canada, 20 million ounces. And I think they just announced recently it took them almost 3 months to get 20 million ounces of physical silver out of the market. And that probably had something to do with the recent rise in the silver price as well. So it suggests to me that, you know, silver is very undervalued, and it's going to be going much, much higher.
Yeah.
Well, Alasdair, it's been a real pleasure speaking with you.
Well, thank you, James.
And, you know, if you want to see more of Alasdair's essays, financeandeconomics.org, I highly recommend it.
Thank you very much.
It's been a real pleasure. Thank you.
Mine. Thanks.